Good morning. Welcome to today's episode of Morning Wealth. Have a wonderful Thursday ahead. Three things that we will talk about: stimulus stalemate, Facebook breakup, and ECB purview. Stocks retreated from record levels as investors monitored the negotiations in Washington over another fiscal stimulus package. The Dow fell 0.4%, the S&P was down 0.8%, a day after the benchmark notched its 30th record close for this year. The tech-heavy Nasdaq dropped about 1.9% a day after it recorded its 50th record close for 2020. Investors are still optimistic Congress will pass another coronavirus relief package to bolster the economic recovery as rising infections prompt restrictions on social and business activity. The size of the package, though, is a critical point. A bipartisan group of lawmakers released more details of their $908 billion package, but struggled to resolve differences over the same two issues: business liability shield and aid to state and local government. That plan is now competing with Steven Mnuchin's $916 billion option, backed by the White House and senior Republicans. Mitch McConnell accused Nancy Pelosi and Chuck Schumer of having moved the goalposts in negotiations, and there's no indication of talks between party leaders. It's well established that the need for fiscal stimulus is more than ever, yet we are for the last 4 months haggling around this and not getting anything passed. It's phenomenal how this thing can really play off like this. So the stimulus stalemate continues. Treasuries dipped, the 10-year yields were up almost 2 basis points to above 0.93. The dollar mostly advanced against the G10 basket, though Aussie outperformed. Gold dropped more than 1.5% and Asian equity futures are in the red. Break up Facebook. That's what the US antitrust officials and a coalition of states want to do after accusing it of abusing its monopolistic powers. They're calling for a judge to break up the company, including separating its main social media platform from Instagram and WhatsApp. It's the second major case brought against an American tech giant following the Justice Department's October complaint against Alphabet's Google. In corporate news, shares of FireEye fell about 13% after the cyber security firm said that it was breached by nation-state hackers. The attack compromised the software tools used to test the defenses of thousands of customers, unfortunately. Lowe's rose 5.9% after the home improvement retailer said it expects sales to rise about 22% for the fiscal year. Tesla shares dropped about 7% a day after the company announced plans to sell about $5 billion in stock, and founder Elon Musk said that he had moved to Texas from California for what he feels is a more supportive environment for entrepreneurs. Meanwhile, shares of DoorDash surged 86% as they made their debut. The stock priced at 102 in the company's initial public offering, above the estimated range of 90 to 95. In other markets, the Euro Stoxx 600 rose about 0.3%. Investors are cautiously optimistic that the UK and the European Union may strike a trade deal soon. Trading in Asia was mixed. China's Shanghai Composite fell 1.1%, while Korea's Kospi advanced 2%, and Japan's Nikkei 225 rose 1.3%. Lastly, some thoughts on the ECB. Today's monetary policy announcement is the most important risk event this week. The ECB is widely expected to ease monetary policy, making them one of the few central banks actively fighting the COVID-19 economic impact with fresh stimulus. Normally, the prospect of new easing would be negative for the currency, but investors have bid Euro USD sharply higher last month, and there is a serious risk of a post-ECB Euro rally. When the central bank last met in late October, ECB President Lagarde said they are looking to recalibrate all instruments in their next policy meeting. She warned that a contraction cannot be rolled out for the fourth quarter, and there is quote-unquote little doubt that more stimulus is needed, as they quote-unquote will be looking at recalibrating everything. With less than 24 hours to their announcement, we can expect the ECB at minimum to raise their pandemic emergency purchase program by about 400 to 600 billion and extend it to the end of 2021 and possibly even 2022. More asset purchases are likely as well, but most economists are not looking for a rate cut. One other problem that ECB will probably address is the fact that the euro has been strong over the last couple of months. Since the last policy meeting, euro USD has appreciated as much as 3%. It rose from 1.17 to a high of 1.2175 before pulling back this week. The central bank admitted that they were watching the euro USD rate back in October when it reached 1.19, and now they should be even more concerned as the strong currency will offset any easing that they're looking to do. It'll be an interesting dynamic to watch later today. Have a wonderful day. I'll speak to you tomorrow. Thank you.